what a scam that turned out to be. I mean, who would have thunk it, right? Foreign aid was a scam. I've been long in favor of completely abolishing foreign aid, and hopefully they can get rid of that entire agency. There's nothing in the Constitution that authorizes the U.S. government to give aid to foreigners. There's nothing that authorizes the U.S. government to give aid to Americans either. You know, Americans are free if they want to donate to whatever foreign causes they believe in. So if there's some LGBT, project that you think is important in Somalia and you want to send some money there, have at it, right? People are free to do anything they want with the money they earn. But the U.S. government has no constitutional authority to take money away from any American to just fund whatever kind of charity it believes in foreign countries. In fact, it can't even do that domestically either. But at least let's get rid of it internationally. And so that's a step in the right direction. But it is a drop in the bucket when it comes to the federal budget and the type of spending cuts that would be necessary to offset the tax cuts that are coming. Plus, they want to get rid of the SALT limits, which was one of the offsets that they had in the original Tax Cut and Jobs Act, and that was part of the pay for. Now they want to get rid of that. Of course, they're talking about getting rid of the carried interest deduction, but they always talk about that. Biden talked about it. Trump talked about it too when he first got elected. He was supposed to get rid of that. They can't get rid of it, even though, because it doesn't actually save a lot of money. It's only about $1 billion a year, but it's $1 billion that goes to billionaires, right there. Who do you think runs these hedge funds? But they obviously give a lot of money to the politicians. And so that sacred cow never gets gored, despite the fact that a lot of people talk about it. Now, maybe Trump will be able to do it this time. I don't know. But so far, they've tried to kill it over and over again, both Republicans and Democrats, and no one could do it. But again, the significance is more symbolic. I mean, I think it would be fair. Personally, yeah, we should get rid of that. I'd like to get rid of the entire income tax, but if we're going to have an income tax, then, we shouldn't have the carried interest deduction. It should be taxed the same as everybody else. If you run a hedge fund for a living, you should pay the same tax as any other occupation. The government shouldn't be trying to favor one particular occupation over another by trying to use the tax code to get people to pursue their income one way versus doing it another. Now, I get the capital gains, but carried interest is not really capital gains because you didn't put any capital. Sure, if you manage a hedge fund and you put your own money into that hedge fund and then you get a capital gain, yeah, you get the same capital gains treatment as your customers. But if you manage a hedge fund and your carried interest means you have no money up front, right? You're getting a percentage of the gains as compensation for the work that you did to produce those gains. It should be taxed as ordinary income. Just like I have an asset management company, Europe Pacific Asset Management. We charge a management fee instead of a performance fee. But we have to pay taxes on. Now, of course, I'm not the greatest example because I'm in Puerto Rico, right? So I'm only paying 4% tax. But if I still lived in the United States, I would pay 37% tax on the management fee that I charge to manage money. Why should a hedge fund that charges a fee a different way pay 20%? We should all be taxed the same. Now, of course, any hedge fund manager that wants to move to Puerto Rico, well, can have the same tax treatment as me. That's why a lot of my neighbors run hedge funds, right? A lot of people have come down here. So that's the legitimate way to get out from under these high taxes. But even if, they were to get rid of it, it's not going to amount to anything. When people are talking about inflation, I'm going to get into inflation a lot after this break. But when people are talking about the inflation threat, it's not coming from tariffs. Yes, tariffs are going to make all sorts of goods more expensive, but they'll end up making a lot of services less expensive, which of course is bad news if you're providing those services and you're an American, right? Because we don't import our services. We do that domestically, but we import all the goods, a lot of the goods, and so they're going to be more expensive. The real inflation threat is coming from the much bigger budget deficits that are going to be the result of tax cuts and a failure to reduce spending. We're going to have bigger deficits. We're going to have more money printing. We're going to have more quantitative easing. And that's the reason we're going to have a lot more inflation, not the tariffs, even though I don't really think they're going to get imposed to that degree, because I think inside the Trump administration, they realize the harm they do domestically, and they've already seen the reaction in the market, it's like, the trial balloon ends up being the Hindenburg. You back away. And we're just going to go deeper into it. But the significant thing about stagflation, other than the fact that it's the worst of both worlds, is that it's the one thing that the Federal Reserve has no contingency plan for. We went over this on a prior podcast. Jerome Powell was asked about it at a press conference. What's your plan for stagflation? And his response was, we're just going to hope we don't have it. Well, hoping is not a plan. But why is hoping all they've got? Because there is no plan. Stagflation is the one thing that their tools don't work with, right? Because they can either fight inflation or try to stimulate the economy. And the tools, are opposite. So if there's too much inflation, what do? Well, they raise interest rates, or they do quantitative tightening, right? What do if the economy is weak, if the labor market is weak? They do the opposite of that. They cut interest rates and they do quantitative easing. Well, if you have a weak economy, rising unemployment, and rising inflation at the same time, the Fed's got nothing. You can't ease and tighten simultaneously. It's like you can't push and pull on the same thing because you go nowhere. So if the Fed gets stagflation, they're out of ammo. They got nothing, right? And in fact, earlier this week, I think maybe Thursday, not that early in the week, the Fed announced the results of its stress tests. It's every year they come out with these stress tests for the bank. And what do you know? The banks passed, right? They passed the stress. I think they passed them. But they did not test at all for stagflation. Right? The most adverse scenario, right? This is the worst possible thing the Fed could think of, right? The worst case scenario was a recession where stock market went down, like real estate market went down, but inflation went way down and interest rates went way down. So wait a minute. This is supposed to be the worst thing that can happen. And in the worst possible thing, interest rates go down and inflation comes down. Well, why is that bad? Isn't that what everybody wants? Like, we got all this debt. Everybody is loaded up with debt. And the Fed is saying, imagine how bad it's going to be if interest rates go down. Well, wait a minute. That's a relief. We all want interest rates to go down. Certainly Donald Trump wants interest rates to go down. So according to the Fed, this would be a disaster. This is such a horrible thing if interest rates go down and inflation comes down. But wait a minute. Don't we want inflation to come down? I mean, it's been so high for so long. Why would inflation coming down be part of the worst case scenario that the banks are testing for? Because the Fed just assumes that if we have a severe recession, well, we're going to get rewarded with low interest rates and low inflation. Well, I can think of a far more adverse scenario than that one. And that's the scenario where we have a recession, but interest rates go up and inflation goes up. And in fact, it's because inflation goes up that interest rates go up. Now, isn't that worse, right? Why doesn't the Fed test for that? Why doesn't the Fed say, okay, all you banks, I want you to run a stress test and imagine the stock market goes down, the real estate market goes down, but interest rates and inflation go up. So run a test for that. The reason that Powell is not asking the banks to do that test is he knows that every single major bank will fail. If we have that type of scenario where we have inflation and recession at the same time, and the result is rising, not falling interest rates, that's it, right? Everything comes crashing down. And so that's the reason there's no stress test for stagflation. That's the reason that the Fed has no plan for stagflation, right? But that's why we're going to have stagflation. You know, Murphy's got this law. Obviously, Powell doesn't know Murphy's law, but it says anything that can go wrong will go wrong. And stagflation is the worst thing that can go wrong, and it eventually will go wrong. In fact, it's probably already going wrong. So let me get to the data that we got this week that evidences stagflation, right? And nobody is talking about this, in the mainstream media, the mainstream financial media. I mean, maybe there's some other podcasts that talk about it. I can't watch everybody's podcast. I'm sure there's some other guys that get it. But this is where the truth is coming from. It's not coming from conventional media. It's coming from podcasts, right? So anyway, so we got the jobs numbers today. But before I get into the non-farm number, talk about the JOLTS number that we got on jobs earlier this week, came out on Tuesday. A big job drop in job openings, down to 7.6 million from 8 million, actually from 8.156 million. They were looking for 8 million job openings, and we only got 7.6. So that was a very disappointing number, and it shows that companies are, they're not hiring as much. And I think that the job openings will continue to contract in the months ahead. Now, the unemployment rate is still low, but it's notching up. It went up to 219,000 for the week from 208,000 the prior week. It's still low, but it is heading in the wrong direction, and I expect it to continue to head in that direction. The jobs report, and before I even get into the actual jobs report, the government came out and announced another like 600,000 jobs that were eliminated from last year, 2024. That's what? Almost 50,000 jobs per month. And remember, they've already revised heavily down all of those numbers. I mean, pretty much all of the job numbers that originally were reported as being beats, where we got a number that was greater than was expected. It now turns out that those reports were misses. We were celebrating a beat when we should have been, mourning a miss. And all the reports that were misses were actually much bigger misses than what was reported. So, I mean, all the market reactions, right? The stock market rallied because we had stronger than expected jobs. Well, it turns out the market shouldn't have rallied, because a year later we find out that we actually had a weaker than expected job report. I mean, that's why I keep talking about the fact that the Fed says that it's data dependent and it depends on this data, which is completely unreliable. None of it means anything when it comes to these jobs. The government doesn't even know how many jobs were created. So many of these jobs are just made up based on the birth-death model. And I also read up on Zero Hedge that all the jobs, I've been talking about this, but all the jobs that were created in 2024 went to illegals. There weren't any jobs created for legal Americans. It was all the illegals that were coming across the border. They got the jobs. Now we're going to try to kick them out. So, I mean, maybe there's going to be a lot of job losses. I wonder if that counts. If you kick out an illegal who's employed, does that count as a job loss? I guess he's not unemployed if he's no longer in the country anymore. But so the whole thing was a fake. I was saying that all year, that the jobs numbers were going to be revised down, and I was predicting big revisions after the election, and we've got them. In fact, they started the revisions right before the election, and we've gotten multiple downward revisions, and I think we got more coming.